Hi guys, and welcome to part two. In part one, we just touched on the how part of how to be informatically contrarian, and that flows very nicely into the main focus of part two, which is the trading methodology. So, uh, this is practically what you do, to be a contrarian trader, informatically contrarian. And I'm just going to take you through that right now. So, obviously, the things that you absolutely need is an MT4 PC platform because the indicators are written in MQL4, and then you need a trading account with us, which you probably already have because you want to learn about how this manual works and you're watching this video. So we passed through that, and then you're also receiving updates on Telegram. So the most important thing to remember when you actually start trading, so on the practical aspect, is this golden rule of that: trust the system. You need to put in the least discretion. You need to apply absolutely no discretion in trying to understand how the system is, or well, not trying to understand what it does, but to make judgments on what the system is doing. This is not the time for that. Uh, when you're trading this manual, it's trading the system through this manual. You are at a point where you are learning to understand what the system is doing, under what conditions, and what kind of decisions do you make according to what you're seeing as an output on your charts. And you have to start by applying these rules that we'll also talk about as we go further down. You need to be able to apply that absolutely as is, because that's the context that we're looking at, in which we know that we will achieve high success. So if you apply discretion, that means you're going outside that context, and then now you might find a situation that has less success. There is a situation of more success where now you're applying more discretion, but that's in the advanced manual. In order for you to do in that well in the advanced manual, you need to get things right in the beginner's manual. And this is going to be a particularly difficult thing for you, because I know it was for me, because you will very quickly realize that this machine, the system, is operating at a level of consciousness that is below you. So it's not as smart as you. You look at the chart after a couple of weeks or a couple of days, and you'll start pointing out, it's not quick enough to do this, this and that. You already identifying, uh, point of optimization and its limits. But it is not time yet for you to optimize. You really want to internalize the things that it does and why it does them. So this is the golden rule. You need to learn to trust the system, and you are not going to make any judgments against what it's saying. So we are taking it as it is so that we can learn and master the principles and the rules on which the machine operates on. Absolutely important. Probably the most important thing about the beginner manual. So, and then this is how you take trades using the beginner manual in the system. So, let's look at US 100 on the 15 minutes chart. So, say for example, you're taking this buy move. So you would have gotten the signal somewhere around this candle, and then it would have been confirmed when this candle closes, which is at the beginning of this one, and you would enter in here. So the successive steps, they talk about setting an SL, a stop loss. So uh, because you're going in buy, so you look below for the nearest key area. So you've got a Fibonacci and an order block here. So what you can do is that you can set your stop loss somewhere uh, at the midpoint of the order block, or somewhere below it, just a couple of points below, um, just to give it space, that because it can come and encroach and maybe just spike down here, and then just make sure that you miss that one. So then you can put your stop loss down here to make sure that, if this move goes against you, then you can protect your profits. And then when you open your position here, you you want to open two positions and set a TP for the first one, which would give you your daily 5% take away from the market. That's what I'm suggesting as your initial um, uh, uh, um, trading plan. So yeah, then you take your 5%, that would be somewhere around here, just by convention, how it usually looks like. So then you would take your profits here, and then now your first position that has a TP, you hit your daily target, which is 5%, then the position would close. But now, because you want to capitalize on the whole move, maybe it goes on right up until tomorrow. You want to make sure that you also capitalizing, on having known that the market is buying at that time. So you would leave your runner running, and then maybe, for example, let's look at a much more realistic situation. So you see that there's a key area here of price, and then let's say you would say, I've made enough for today, I'm closing my runner here, I want to get busy with other things. Or maybe you can say, well, I don't think it will break through this area, maybe based on your analysis on a higher time frame, and then maybe you place your TP for your runner over here. Or you just take the stop loss and you put it by your entry there to make sure that, okay, I'm going to let it run for as long as maybe I can. I'll check it in the evening. But if it does, if the market does reverse and go back to my entry, then at least I won't lose the profits that I've already closed in with that 5%, because now that means, Uguti, you have not met your daily target. So you don't want to lose something that you already have over something that now, excuse me, over something that now you're trying to capitalize with. So that's basically how we take trades in the beginner manual. And that is what is being covered here. And then I also talk about risking out or time frame arbitrage. This is a concept that I cover extensively in the advanced manual. So I'm not going to touch on it much, but it's something that I will guide you on via the Telegram channel. So when I say arbitrage trade, and then I give the signal, what I'm basically saying there is that we're in drawdown on a higher time frame, and then we're trying to de-risk out of that position. So we're going on to the time frame, lower time frame, to take advantage of the move against us, and we are going to profit out of it to make sure that the risk is removed from the one on the higher time frame. That's basically what it is. I'm not going to go into it now. It's something that you learn more about in the advanced manual. And the risks is that sometimes there's fake signals. If I'll try and I'll just try and find one for you real quickly. Yes, here's one. So if it flatlines, flat lines are fake signals, because it said we're going to buy and there wasn't really a move. So you wouldn't have made any profits from this kind of move. But what is important also, going back to the golden rule of low discretion, you're not going to sit here and try and figure out which signal is going to be a fake or which one isn't going to be a fake, for whatever reason that you might think that you are going to take every signal that's going to come from the system, and then you are going to manage it according to what the manual says, because you are at a low discretion area, or part of your trading. So if you would have taken this one, the way that I suggest that you take your risk management by 25% risk for every trade, comes from that usually you won't have more than three fakes. So out of every trade that you take, if it goes against you, it won't go against you more than three times. So you'll always have four trades in you with your account, right? So that's covered. So from there on, I'm just covering, the rationale and the way that we think about the trading. And then there's an opportunity for you to log your results for, the trading days that you've been having. So if you trade every day, you probably trade for 20 days in a month. Sometimes it has more. And then you have a chance to really track your progress there via the table. And we talk about how much you can make a month if you are investing about $1,000. You can go as far as doubling or more in a period of a month, and then just other key nuggets of information that can help you do better in your trading. So that's the beginner manual part two. Thank you for tuning in, and We'll talk.